the Headwater Resourceman here. It's January 6th, 2025. I'm getting used to saying 2025. We're out of tax loss silly season, and some news have started to come in from different companies. Haven't seen, immense new items so far, not from the companies I've watched at least, but there's some stuff out. And of course, there's some stuff that's just simply cheap. Anyway, I'll mostly focus on different companies in this update. First of all, thanks to the sponsors. Market today, silver metals done well. Markets, last I looked, they did well, but apparently for the last hour or two, stock market the US stock market has kind of rolled over. I think Bitcoin is up to 100k or something. So kind of a risk-on environment. When I looked in one hodl folio earlier today, even despite the fact that silver was up 2%, gold was slightly down. Copper was up, or is up quite a bit. I think I saw like a third of the companies with unchanged prices, a third up, and a third with lower prices, which kinda again goes to show most of them did not have any news out, and they're all into metals. And a third, nothing changed in terms of price. A third were higher in price, a third were lower in price. So again, basically goes to show that on a daily basis, nothing really makes sense. And that's how, that's where you get, value shuffling and volatility to come into play. I've done no trades today, so I've not seen anything really get that out of touch with reality for me to make any, substantial moves, let's say. I saw Magna Mining go up. I think it was up 10% or something today. First I thought it might have something to do with Justin Trudeau resigning, but I don't think so. Somebody simply wants Magna, which is nice to see. It getting appreciated. But that's more of a long-term case anyway. You're betting on the management team, really. So there's no obvious... There's no obvious exit, I was going to say. I can't say that Magna is overvalued because it goes up 10%. And I think it has a lot of room left to the upside over the coming years. Simple as that. And the idea has been to not really touch Magna, because when you have a good management team like we've seen, the surprises tend to come to the upside, and they just keep surprising to the upside. So, the longer you hold it, the more surprises to the upside you will probably have experienced, and by merit of that, one would expect value to climb higher. So in a year, it should probably be higher than today, and in 2 years, even higher than that. So in a sense, you're just, again, using the patience arbitrage, which I talked about in my last video, which was a long rant about patience being basically the biggest edge. And I briefly touched on the fact that, when you have a good management team, the surprises tend to be the upside. So biggest gains when you're holding, going into as many positive surprises to the upside as possible. And of course, if you hold a company with a good management team for one day, there's not a lot of time for the management team to surprise to the upside. But if you hold it for 2 years, they might have put out 30 news releases that are net positive on average. Anyway, one thing that's kind of interesting actually. This was put out on January 3rd. Microsoft expects to spend $80 billion on AI-enabled data centers in fiscal 2025. 2 Deutsche Gold messages ago, I was on a panel and we discussed... I don't exactly remember the title, but it had something to do with electrification and metal demand, etc. And I seem to remember that I brought or mentioned some headlines coming out of Microsoft and Google and Meta and what have you, at the time, Amazon, etc. And I'm pretty sure they had, there were articles that said something like, Microsoft is planning to spend $80 billion over the next 5 years, and maybe Amazon or Google had like $100 billion over the next 5 years, something along those lines. I mean, it does looks like this is kind of a ramp up, because as you can see, the title of this article is Microsoft expect to spend 80 billion on data centers in fiscal 2025. That's not 80 billion over 5 years, obviously. It's 80 billion within 1 year. So it's like a 5 times increase in terms of pace, in a sense. So it does look like it's a real race, and I don't know what's going to come out at the end of this spending. I mean, all of these companies spending this much money on basically the same thing. So the question is, will this be a winner takes all, or will it be, that let's say AI matures or peaks in the capabilities, that it doesn't get much better than where it is now. I mean, let's say it gets incrementally better with all the investments, but it's like that it won't be another quantum leap, perhaps. In that case, what happens when you spent all this? And because if you spend 80 billion, what are you expecting to get in return? I don't know, more than 80 billion, of course. So the question happens in a sense that if we're in a race now, and interestingly, we haven't really seen, copper and stuff, that those metals that are, needed to build all these data centers. Copper is at a decent price, a good price. It's certainly not low, but it's not super high anyway. But what happens at the end of this? Do we have like a big ramp up in metals being used for data centers? What happens if this is a bubble? What happens if the winner takes all? What happens if no one wins? In a sense, will we have a crash in spending? Will there be some new technology that means you don't need to spend $80 billion to, have this kind of output power in terms of or computing power, I was going to say. Let's say they really cracked the quantum computer code, and it cost you 10 billion to get 800 billion worth of computing power today. So I don't know. Like always, that's why I don't focus on that stuff. I'm not building a case exactly around the demands of AI or the demands of data centers, etc. The way I see it is like, be a stock picker first at all times and let the macro be the bonus. Because let's face it, if we go into a very hot environment where it's like gold, silver, and copper just keeps going up, yes, the marginal projects will, of course, probably go up the most in value. But if you made picks, like I like to say, pick stocks like it's a perpetual bear market, and have the conviction like it's a perpetual bull market, because in that case, if you pick companies that you think, just on their merits alone, the company merits, that hey, this should be able to create value, or is worth a lot, or can monetize stuff at today's prices or even lower prices, just by the fact of what the company is expected to do, what value they're expected to create, then a possible like metals boom is like an ace up the sleeve. If you're right, or look right, if you're right on the average case you own, they do create value. Maybe they increase the value of the company by 200% over the next 2 years, and you would expect to, even in this crap environment, to make, let's say, 100% over 2 years, which is an absolutely fantastic return. Slap on a metals boom or higher metals prices, higher value of the projects, and then slap on that the sentiment really gets going. So we go from a very, a huge discount to maybe a premium. Then you have no idea. That's why you can't really guess much in terms of where the price of mining companies are going to trade, because It's like Schrodinger's cat within Schrodinger's cat. You don't know exactly what the value of the company is going to be in the future. You don't know exactly what the and partly because you don't know where the metals and potential margins are going to be in the future, and then you don't know how the market is going to care about the value. Or we're going to be in a bubble where every ounce in the ground has much higher value put on it than it should, or will it have much lower that we're seeing now? The big thing is that when the next big sentiment changes to the upside, that's potentially massive free optionality to the upside, regardless of what the company's fundamentals are really, because it can't get that much worse. For a case-by-case basis, it can of course get worse because companies can go bankrupt. Companies can continue to dilute, etc., etc. It's just that we know that yes, ounces in the ground are valued at $20 per ounce, for example, might be valued at 80 in the future. So if you have 1 million ounces and find another million ounces, and those 2 million ounces, the company is valued $20 for 1 million ounce today, and imagine if they have 2 million ounces and they get valued at $80 per ounce. I mean, that's a huge multiplier. So that's what's in store. That's why I like the mining sector overall right now. It's just that still crap is crap and crap is worthless or the long run. So stick to stock picking and let macro and sentiment be a bonus. And from here on out, it's almost, pretty much by default going to be a big bonus to the upside at some point in time. Anyway, I had a bit of fun with this. I used Microsoft Copilot and just put in a prompt how much of each metal is expected to be consumed from an 80 billion investment in data centers. It's a general idea, as they say, and of course you don't know is that 80 billion. 1 second. I had to take a sip of water. Is that 80 billion like strictly data center infrastructure, like materials? I doubt it. And how much is tied into other things like, I don't know exactly. But so it's but still, this is only from one company at the same time. So will this happen? I really doubt it. And of course, there might be substitutions and yada yada. But anyway, this is what AI, Microsoft Copilot, came up with. 1.5 million tons of copper could be required for electrical wiring, cooling systems, and other infrastructure. The other stuff I don't care too much about. Silver, approximately 10,000 tons of silver. I think that came out to what is that, like, over 300 million ounces of silver. I think the annual output of silver globally is like, I might be completely wrong, but I think it's around 450 to 500 million ounces of silver per year. So I mean, it's just, again, it's hard to believe, and I might have done the math wrong, but it's a huge amount. I mean, 10,000 tons of silver is obviously a huge amount. It just goes to show. I mean, that's why I guess people are surprised. Why isn't copper going higher? I mean, when you see these kinds of numbers, and this will be from one single company in the world, where, I mean, if this happens, if it's even close to that, and again, from one company, this is like, added demand. Maybe they would have invested it in something else, so it's substitution. They would maybe, let's say they spend more on these specific data centers, but they would have spent $40 billion on an ongoing basis on something else. Anyway, a rule of thumb, or at least highlights that obviously if you spend $80 billion on investment centers or data centers, there's going to be a lot of metals and minerals that are required to build that. So it's just an interesting, and again, given that this pace seems to be quickening, that it's not over 5 years anymore, it's over 1 year. So who knows? I mean, this might be this might start to get felt in the future and add some tariffs or whatever on top of that. Just simply another thing that's like, yes, this is also a potential bonus riding this AI hype. That if they spend these amounts on data centers, a lot of metals will be needed. Then that can be offset by, we have a global recession and stuff like that. So the copper and silver doesn't get used to other stuff. Still, I mean, there's a possibility. And again, if I'm not paying for it, I'm all for it, like always. That's not risk real. That's just risk to the upside, optionality. Eloro put out a news item today. Eloro Resources continues to intersect long intervals of high-grade silver tin polymetallic mineralization in its definition drilling program at its Eskay deposit, Potosi Department, Bolivia. Some very solid drill results. Here we have 193 grams per ton AG equivalent over 41 meters within a broader interval of 107 over 142.5 meters. This is obviously polymetallic, so I don't know what the net recoveries would be. Still should be quite economic, I would think, especially since it's I think it's, around the starter pit basically, and they're drilling stuff that was assumed to be waste and all that. So, this is not far off from. This, for example, is very good grades, 232 over 81 meters. That's way higher than the average grade that's being mined at San Cristobal right now, and they're making good money on that stuff. So this should be highly economic, even if you, let's say, throw away the tin, for example. 3.11% zinc is good, especially in a bulk mining environment. So yeah, you can read the full news release. One thing to note is that, similar to DSB 68, results from these 3 additional holes continue to demonstrate potential significant underestimation of the silver grade, similar to that of the previously reported metallurgical test result from a 6.3 ton bulk sample, which returned a much higher silver head grade of 91 grams per ton compared to the grade of 31 grams per ton obtained in the original twin hole. So, again, this is like I just talked about with the data centers. This is, if the results with drilling are good enough and there's a nugget effect potentially, or whatever reason there is, I assume it almost has to be a nugget effect. So if there's upside to price, the upside potential that these drill intercepts, because obviously the drill core is not that thick, and in a mining scenario you would obviously you mine way higher volumes than a single slice through the earth from a drill core diameter. That's really, really good. So I don't know how this exactly will be, proven or disproven. Maybe even more bulk samples. But let's just say that yes, this is obviously increasing the value of the Eskay deposit, because they're proving that there's more high-grade mineralization. And this is basically what the program is designed to do, filling gaps that are presently categorized as low-grade or internal waste. So everything they hit there above the economic cutoff is obviously added value, net. Better define the full vertical and lateral extent of high-grade AG mineralization, expand high-grade tin mineralization to the western northwest, and provide 2 large-size PQ holes for metallurgical testing. So this is again, higher diameter, so it's a bigger sample size, which is good, which should be closer to the PQ core size has been used for all holes in this program to obtain larger, more representative core samples. So that might be, one of the reasons that these results are really good, because they're closer to the, let's say, true grade of the deposit. So when you have a bigger, slightly bigger core sample, you get even better grades. And yeah, so they've hit tin zones and silver zones like this, so intersected near surface high grade silver mineralization, 81 over 30 meters starting from surface. Near surface high grade tin zone, 0.44% 98% tin, 96 AG equivalent over 22 meters. Obviously, again, it's like I don't know what you would probably make money on. I'm guessing here, of course. I would think like, and that's hard to say exactly, given that there will be recoveries and stuff like that to be applied. But I'm just guessing maybe cutoff of 40 grams per ton AG equivalent for cutoff. I don't think that's too far off. And then obviously you can see all this should be highly economic. So yeah, Eloro has been a kind of a sleepy story. Well, it was a huge beta play because it's a huge system going into a 4-year bear market, whereas gone through a 4-year bear market, which is obviously, typically the ones that take the most punishment. And then the initial resource was out, which showed the global resource, huge global resource, but low grades. So people looked at it, it's like, oh, this is a very marginal deposit, super high beta, etc., etc. This is kind of they're proving up the more meaty parts of the deposit. So I think there is. I can't guarantee it, but I'm guessing there is for sure a deposit here at Eskay that would be very economic at today's metal prices. That's what I think. They're working obviously on a PEA, and that's where it's going to show. So that might be the light bulb moment, maybe, that when it gets put on paper, especially if the economics are good. And of course that depends kind of, if you do it on let's say you have 300 million tons or whatever of kind of high grade mineralization for a bulk mine, capex would be lower than if you did the whole darn thing, obviously, and the IRR would be higher, and the capex would be lower, and payback, well, that's IRR, margins, etc., would be better. So I don't know exactly how the PA is gonna look, for example, but if they can prove up good amounts of this stuff, I think it's gonna show very good economics. So that's potentially something to front run, that if you think that, hey, this market is totally looking at Eskay as a very marginal, very large and very marginal, super high capex project, and the PA shows that, hey, this is actually a not that high in capex, again depending on what they include in the material, but should be very high margin, and obviously the best proof of concept is probably San Cristobal, which is also in Bolivia, that have average grades that are lower than these for sure, and are making very good money on that. I'm getting tempted. That's the problem. It's like there's so many stores that are good, and there's some stores that are pretty much intact, that have just gone down in price, so they're cheap. So it's not like it's a change store. It's just the price has gone down so much. And then there's some other stores where it's like the story has gotten better, but the market has missed it, and yada yada yada. So again, it's like my appetite for juniors right now is infinite, basically. The problem is you can't own them all. Everything that is cheap, everything that's still around, if we go into, the bull kicks off for real in the junior space, everything pretty much gonna go up like every single bull before. So you theoretically can make money on everything, but it's hard to have 50, 60 juniors or something and follow along with those. But I do have a lot of holdings. It's just that many are, 0.1 to 1% positions, because I think they're, dirt cheap. But it's just a hassle really to if you have equally spread in all, so you gotta watch everyone as close as possible, or as close as anyone else. That takes a lot of time. I think the bet in Eloro is quite simple. You have a big silver polymetallic deposit that's with very low sentiment, very underappreciated, and it's getting better and better. And I think there's a gap there the perception of it and the actual value of it, and maybe the PEA will be the defining moment when people figure out that, oh, I mean, everybody said this was a super marginal worthless system, and all of a sudden it comes out with pretty robust economics, and who knows, maybe they get a bigger player involved, because obviously this system is so big that, I mean, first of all, it makes sense to prove that there is a starter mine here, or let's say a big, pretty high margin mine, and then you get everything else for free. I mean, that's typically how the big mines are. It's like you find a high grade core, let's say, so okay, it's worth building a mine around, and then when they mine that out, which might be let's say 10 years from now, all of a sudden metal prices are higher, and you have all the sunk costs in there already. So it's like you go for the lower grade stuff because metal prices are higher, so you can make money on that, and you have some of these big systems, they just keep going forever, I was gonna say. Headwater Gold announces completion of first pass drilling at the TJ project Nevada. This came out in December. Headwater's initial drill program at TJ consisted of 5 reverse circulation drill holes totaling 1,030 meters. Drill test. This was the first. This is 100% owned, and was the first 100% owned project to be drilled after Centerra came in with, what was it, 4 million, I think. Drill tested multiple targets for high-grade epithermal veins beneath outcropping silica sinter, yada yada. All drill holes encounter strong alteration indicative of upper levels of epithermal system characterized by broad and lateral extensive intersolidification, yada yada. Sulfide concentrations. 3 holes targeting the east interfault intersected significant coarse veining with epithermal vein textures, diagnostic of the upper portions of an epithermal system. So all holes hit what appears to be an epithermal system, which hopefully, of course, is gold and silver bearing. Favorable alteration epithermal veining encountering first place drill program confirms the presence of a large, fully preserved epithermal system, and will provide critical vectoring to guide future drilling to test for higher grade gold at depth and along strike. Final assays results are pending and expecting Q1 2025. And you can read the quotes by the CEO. I think they're always good to read. Here you see, where the holes are located, basically. And the thing is, of course, I mean, that's the whole case with Headwater, in a sense that almost nobody, I was going to say, fully appreciates how valuable low sulfidation epithermal system can be. There are some examples like the Merlin and what is it called, like the Merlin silicon discovery, I think. But that's a huge lower grade bulk system, but that's like what, 12 million ounces or something, probably worth a few $1 billion. But there's also the old Midas mines and Aurora and stuff, where it's like if you find 500,000 to 500,000 to 1 million ounces of high grade gold, like 10 to 15 grams per ton. The margins of that on that stuff, capex should be low because it would not be a huge throughput operation. That could also be worth billion plus. I mean, look at Silvercrest, for example. They have like 100 million ounces AG equivalent in reserves, if I remember correctly. They got sold for $2 billion. 100 million ounces of silver AG equivalent. So what's that, like I don't know what the AU ratio is now, but let's say that's 1.2 million ounces of gold equivalent. 1.2 million ounces, that's an operating mine, of course, but this is in Nevada, so you can imagine, again, and that's not a big, long-lived mine, not yet at least, because the reserves are what they are. But there's probably exploration potential. But it's simply high margin stuff. They make a ton of money, especially at this gold and silver price. I mean, if you had an all-in sustaining cost of like I don't know, $600-700 if you found like 15 grams per ton, 1 million ounces of 15 grams per ton. Huge value. I mean, $1 billion easy, I would think. I mean, imagine like 10-year operation, 100,000 ounces per year. If you have, again, just theory crafting here, but let's say like over at least $1,500 in ASIC margin, and you produce 100,000 ounces. I mean, that's a lot of money, and there's potential, exploration potential on top of that. So yeah, I mean, hopefully TJ will be 100% owned discovery. As you can see here, I mean, they think that, well, every hole pretty much hit veining. Here you have vein zone and target. So I guess, I mean, there's silicification and stuff. So it's like they can tell that, oh, there's a lot of hydrothermal fluids getting slushed around here. I mean, you might have a build-up here, for example, but the main like ore zones might be somewhere along these lines, which they basically, I mean, show in the schematic. And maybe the bonanza zone, let's say where the higher grades start to come in, if there are higher grades, might be down here. So I don't personally expect, let's see here. So here's some material, and you can kind of see, I mean, this looks like banded veining. This looks like banded veining. This is more, better looking quartz, more pure, maybe not a lot of sulfide. So from a personal perspective, am I expecting them to put out like 2 meters of 15 grams per ton and stuff like that? No, I personally don't. Because these are just the first holes, and they think they're still high up in the system. And of course, I mean, when the fluids come up, they deposit metals, and when it reaches the surface, there's basically no gold and silver left. So it's like the grade should be increasing from let's say the end of the boiling zone. I guess this is 150 meters below. I'm wondering if this is where they think the kind of the boiling zone might start. So maybe this one actually hit the start of the boiling zone in the main structure of mineralization. So if they put holes here, and maybe here and here, that's when you would encounter like ore grade stuff. Because in a sense it doesn't make too much sense to like, okay, I mean, you want to confirm that it's worth drilling deeper, because I mean, drilling isn't really cheap, right? So if they've confirmed that yes, they are here in two areas, they hit low sulfidation epithermal system. Then the question is it an economic one? Does it have bonanza type grade? So it's like these are like, and that's why obviously Centerra is interested in the first place, and why Newmont is involved, and it used to be Newcrest, but now Newmont has the JV on Spring Peak. I mean, these are $1 billion+ prices that they're after. I think the market cap is like 14 million CAD or something. They have around, I think, 4 million CAD in cash, so they have a enterprise value of 10 million CAD. I mean, what chance of success is priced in? Yes, there will be, of course, dilution, etc. But so I'm not particularly super interested in pre-discovery stories, because they are so, proven success is so darn cheap. In the case of Headwater, they already have discoveries over at Spring Peak, and that's where they're still working with Newmont, and Newmont is a heck of a lot bigger than Newcrest was. So of course they need a much higher threshold for success, but they have basically put together a district right to Borealis. So Spring Peak might end up being a huge company maker. We don't know. We know for a fact what the market cap is. We know for a fact what the enterprise value is. We know what price we're paying, and that's the only thing we can know at any point in time. We can't guarantee any specific outcome of any drill hole, or any big picture what a potential deposit is exactly going to look like. We know what price we're paying for this bet. Right now it's around 10 million in enterprise value, 40 million CAD market cap. So it's not pricing in that there's any real chance of success of Spring Peak becoming a billion plus deposit, or that TG is going to be a discovery of any significance. So I mean that's why I think Headwater is cheap. Darn cheap. I think there's really good people, huge skin in the game. They obviously know how to. I mean, again, they're the biggest. The insiders are the biggest shareholders, and they've been able to get both Newcrest, then Newmont, and now lately Centerra involved. So obviously, this is not a run-of-the-mill junior. This is not a run-of-the-mill explorer. They're exploring primarily in Nevada, where you would get the highest bang for the buck in case of success, because ounces in Nevada tends to be the highest valued. So this is, very much a staple in the HODL folios. It is in a sense high risk, but it's also high reward simply because of the low price. So, I mean, do I know that Headwater is gonna prove up something at Spring Peak and get sold for a lot of money, or TJ? No, I just know that if they find something of significance or prove up something of significance, and when the market starts to care or acknowledge the fact that obviously Newmont and Centerra see something in these guys, so I mean, you can just take whatever, increase the dilution to 20 million. Let's say Blue Sky, well, not even Blue Sky would be even higher, but let's say a big upside case, they prove up, or they find 500,000 or a million ounces high grade stuff and get sold for 500 million plus. I mean, obviously there's upside there, but it's going to take a few years, but that's typically how it works. You can't prove up, a 10 bagger takes, I think Rick Rules says 3 to 5 years on average for him. Then Juggernaut Exploration put out news today. Juggernaut intersects 8.27 grams per ton AU equivalent over 11.03 meters on SK style VMS Kokomo target that remains open on Midas Golden Triangle. So Midas is one of their flagship projects. The other one is Bingo. They get to Bingo lower down. I thought so. Where is it? Bingo property. Results from the Bingo drill campaign have been received. NASA is up to 1.68 grams per ton AU equivalent over 2.65 meters have been intersected. Blah, blah, blah. A number of holes contain anomalous gold values. So they put 1, 2, 3, 4. Okay, so they drill more holes, but these are the ones where they drill a lot of holes at Bingo. 23. Okay, these are the ones that hit significant mineralization. Still, obviously, unfortunately, no barn burners. And the funny thing is, like last season, I had higher hopes for the Midas than Bingo. And then it came out with, they hit actually pretty good results at Bingo and not at Midas. And now they come back again with this campaign. Now they hit good stuff. I mean, this is over an 80 gram meter hole at the Kokomo target on on the Midas project. But it was Bingo that disappointed. Bingo was the Goliath Shorebet type lookalike. But this is obviously significant. I mean, again, if you hit 80 plus gram meter holes, that doesn't fall out of the sky. So statistically, this is very impressive. Strong gold values as well as sulfur mineralization consistent with what is typically observed in proximity of an SK style VMS system. The form of moderate semi-massive and massive chalcopyrite, sphalerite, pyrite hosted in quartz, yada yada yada. It is exciting to have confirmed with the drill bit of broad high grade gold VMS mineralization on our flagship Midas property. The fact that mineralization is widespread on surface as well in drill holes strongly indicate a large system at play on the property. With the 2024 drilling, we have potentially intercepted the core of the VHMS system and are now in position to expand on this exciting discovery both along strike to the north and to the depth with future drilling. Okay, obviously encouraging again, simply because you're in that part of the world. We know there's a thing as Eskay Creek. We know there's good VMS deposits there, and they hit a very good hole. Not every hole was like a barn burner. Here they had 3.85 of 0.62, including highest grade 0.85 of 101, almost 1 of 1.5. So it was more this my soul 47 that hit. I mean, kind of a whopper of a hole. I haven't gone through the maps yet, the drill maps, to see how far apart the holes were drilled. Let's see here. 11.03. That's okay. That's here. Outcrop remains open. This is resistivity, chargeability. Outcrop. I don't know if the other holes are supposed to be here because these are all outcrops. Anyway, okay, at least we can say they've snagged something. Don't know what it is. Don't know how big it is. Market's response was minus 28.6%. Pretty big volume. I mean, the sums are not that impressive, given it's only it was a 7-cent stock. It's a 5-cent stock. So, I mean, this is not much in terms of money. But okay, what could explain that? Well, first thing first. I was more focused or excited about bingo, to have another sure bet look like, to confirm it. It doesn't change the fact that they have hit good results at bingo, but these follow-up results didn't hit much, so that's obviously a downer. And that I think the market was more focused on bingo, and then they hit this very good hole at Kokomo, but it was still only one hole. So it's a for sure discovery worthy assay. I mean, you would be happy if you hit way worse than this. So it's very impressive in that sense. But the market looks okay. One really good hole, and then the rest were like, the best ones were like 1 meter, 1 gram per ton, and then you have the bingo where it's like, okay, didn't really hit much at all. Not that the market would care about, at least, except for, yes, there's obviously smoke and stuff like that. And also, let's not forget the fact that, okay, this is a very depressed market, obviously. So what does typically people do? Well, you look for the miracles, I was going to say. It's like you want to get rich quick, or you go on tilt almost, and you want to make back your money quick. So I think kind of maybe forces people to, like, okay, you bet on made and real campaigns in a sense, because if they make a really, if they make a stellar discovery hole, it's like the stock might get lit on fire. That obviously helps with tighter share structure and yada yada yada. So it might be that people is like, okay, some people who plan to sell regardless of what the results were, in a sense. But also it's like, okay, you see and say, just one really good hole, and that's a downer, and you sell because of that. And then also you have the fact that, well, what was I going to say? Okay, now the news is out, and obviously I guess it showed pretty quickly. Let's look at the 1-day action here. I guess it opened down immediately, I would think. So it's like everybody's looking on. It's like, oh, okay, the market doesn't think it's good enough to move it higher. So it's like, okay, there's not going to be a pop, so you sell because of that. And also then, if you think that, well, they need to raise money. So even if you are impressed by this 11 meters of 8.27 grams per ton AU equivalent, which again is a very, very good hole, you're like, oh, well, they're going to raise money. That's going to be the next news release. So even if there is something, even if there's a new Eskay Creek there, they need to raise money to prove that. So I think, you know, the next material, let's say news release, is going to be a financing, and that's what that's like the boogeyman in this sector, and that becomes obviously a self-fulfilling prophecy in a sense. That people sell because they think it's going to come, and then it comes, and then even people might sell off into that, or people are selling now because they want to get into the next placement. So there's always a bunch of chaos around it, and the only thing we know, it's a 7 million market cap. Is this a slam dunk? No, obviously not. They haven't shown they have a slam dunk. Is there a promise here? Obviously, you don't hit a hole like that for no reason. So yeah, I mean, it's a high risk, high reward story, and going back to any other, you know, kind of pre-discovery place, like, we know what we're paying for it. Is there any guarantees that, okay, they're gonna raise money, then they're gonna show that this Kokono, or was that the name of the target? Well, at the Midas project at least, that they have a new, you know, they found a new high-grade VMS deposit and it's gonna be worth a shit ton of money. It's like, no, there's absolutely no guarantees. We know what we're paying for it. When the market will care, or if it ever will care, if they ever actually prove that up, that remains to be seen. So these are stories I don't, you know, I'm betting huge on. It's more, in a sense, the lottery type stuff, where it's like, okay, given how cheap some of these are, if 1 in 5 or 1 in 10 actually end up making a huge discovery, that's going to pay for 5 to 10 other stories like that. So I mean, I don't know if I'm assuming they're gonna be needing to raise money. I might, you know, I probably wouldn't mind getting into that placement, and if I get, you know, warrants, for example, that's gonna benefit me even more, of course, because I do think, I mean, you kind of have to follow up a hole like this. But it remains to be seen. Again, I mean, it's short, obviously isn't that fun, but that's typically what you see in you know, early stage explorers, pre-discovery plays, even though they have already hit something. But you know what I mean, it's like it's not become hot enough, because some stories that make discoveries, they get incredibly hot, market loves them, they go up, have an easier time raising money, so they can produce even more drill results, which keeps them story even harder, and they are also able to, you know, continue the success in a sense. So it's a self-fulfilling prophecy, typically to the upside or downside, and that's a lot of it is dictated by, well, sentiment plays a big part. So that's pretty much it. I mean, there's a huge amount of uncertainties still. You only know the market cap. It's already, this is getting long already. I think this is nothing. Western Alaska, Quinton touched on it a bit in his latest Crescat, and I've touched on it a bit. I picked up some additional shares here near the lows. It's not big volume, but it's off today. It's a very illiquid stock. So it's, I mean, you see, it's like obviously depressed. You can tell that here's when the peak excitement was. Now it's basically been left for dead, even though it doesn't make that much sense because, and I've touched on this before, I mean, this is a very much alive story. I mean, I'm not going to go through everything, but I mean, I think it's quite simple. I mean, they drilled here, they hit mineralization. They already have 75 million ounce AG equivalent, of almost 1,000 grams per ton. That's just in this area, and they have, what is this, 8 kilometers long, 6 kilometers. And the CRD system, I mean, they think it's the distal parts of it, so wherever this mineralization came from, it clawed its way there. So wherever the source is, it didn't jump here, and that's the only thing. It ate its way through whatever limestone and at the end of it you got this. So we know, I mean, literally, figuratively, you kind of, they've snagged the tail of something, and they already have 75 million ounces AG equivalent. And these grades in a tier 1 jurisdiction, you don't see that too often. You don't see a land package like this too often. Already know that, I mean, this is more like proximal, and here you have the zonation, AUCU, lead, zinc, lead, AG, lead, zinc. So that's the zonation. So it looks like the source is to the southwest, and this would be a northeast, how do you call it, edge of something, in a sense. So I think there's plenty to discover in this district still, and it just is one of those things. It's not super easy because, I mean, there's been, here you have Warm Springs Fault, etc. So like geology, I mean, stuff gets faulted off, so it's like the continuation of this. It might have shifted down, it might have shifted to the west or east, or yada yada. I mean, theoretically, I guess it could have. I don't think they believe that, but let's say it shifted up, or this shifted down, and that stuff, the continuation, some block here is eroded or something. I don't think that's the case, but that's only also, let's say, potentially one block. And here the hit stuff as well. And these were actually, I mean, the drill holes they hit here were not bad at all. So it's like when you can just, we're putting in holes here and there, and here and there, and you still hit high grade mineralization. It's like, yeah, there's obviously something going on here. So I mean, imagine this story with, like, I don't know, 4 drill rigs, $30 million in the treasury. I mean, then I really think, I mean, they might have already, I mean, as it says here, priority target zones, because of what they, I mean, hit in the last campaign, and here as well, continuation of this and that. So I mean, imagine they triple this footprint here with like similar grades, so they're up to 225 million ounces AG equivalent. I mean, then you have a pretty sturdy mine in the US. I think they need, I don't know exactly, I talked to some people, they think they need, like, let's say double this to 150. Does that look impossible? I don't think so. They got up to this is, I think this, inferred though, but it didn't take too much drilling to get a inferred resource of 75 million ounces. So that's good, because there's so, I mean, the concentration of metals is just so high, because of the grades, of course. So you don't need a lot of footprint. You don't need too much drilling. So this, I mean, I think this is still one of the better silver stories out there. Obviously post-discovery, because they already have a resource and plenty of stuff left to drill. But it's been, thanks to, let's say, somewhat, lack of capital, it's been somewhat boring, and they didn't have similar barn burner results here. But it still showed that, as it says here, high priority area. They need to raise money again, and that's something that I've talked about this before. There's no price that's low enough, in a sense, if that makes sense. If I mean, you had yes, I'm pretty sure I talked about this before. Here, they put up visuals that's like, we hit, what was it, like 80-90 meters of intense sulfide mineralization, like semi-massive to massive sulfides, I'm pretty sure. So that told everyone this next hole is going to be a smoker of a hole, most probably. And people just kept on buying, because the idea was that, well, I think the news is going to for sure be good. So, and then the thinking is, so of course it's going to go up when the news gets put out. The problem with that is that the hole was really good. It's like, what was it, 80 meters of 500 gram per ton AG equivalent. Sure, some might have expected like 800 grams per ton AG equivalent. But the thing is, so many people bought into it because they expected that when the news comes out, it's gonna be good, and when it comes out, it's gonna pop because it's good. I mean, that's the linear thinking, which makes sense in a sense. So then I'm gonna sell. So it's like you had a bunch of people that because most people are by de facto short-term catalyst hunters. So you had a bunch of people piling in with the intention that when the news is out, I'm gonna sell. So imagine if, I don't know how many, let's say 2 million shares here got bought up. So it's like the valuation of the company went up. So it's, let's say it even overpriced that success. I don't remember exactly the market cap, but let's say it did. It was, you paid for more success that hadn't happened yet. So in a sense, at face value, it was overvalued. Then you have 2 million shares of people that's like, I'm gonna sell these 2 million shares as soon as the news release is out. So you have, let's say, in the short term at least, stretch valuation, overbought stock, 2 million shares of pent up selling. So then it's like the news has to be even better than the consensus think it is. It need maybe to be like 80 meters of 2,000 gram per ton AG equivalent to shock the consensus, making that peak valuation to all of a sudden look very cheap or something. And get other people to buy up the shares that the 2 million shares that plan to sell was gonna sell anyway. That's kind of the stuff you see in this sector a lot of time. And now I do think it's the opposite, where it's like, okay, they put out news, but it wasn't barn burner news. And nobody, again, most people don't care. They buy stuff that they think is going to go up in the short term or whatever. And now it's like, okay, what's the next news release going to be? The next, quote, material one. Probably news release. So even if you think that, hey, they might hit... this is going to be a new discovery, and this is going to become a mine. Let's say that's what your thesis, that's your base case. Still, you can't do that unless you raise money first. And people who want to, even if they like the story, again, might sell because, I'm selling because I'm going to buy back in the financing and maybe get half a warrant and stuff like that. And other people is like, oh, well, we know they're probably going to raise, and people always get scared of that. And of course, I mean, I wouldn't put past, let's say, brokers, whatever. It's like, constantly, in a sense, highlighting that. It's like, oh, no point in buying now because there's a financing coming up. And of course, if you want to get into the financing, you're going to be wanting the price to go as low as possible. So it's like, it's kind of the boogeyman again. It's like a financing. There's always, that's the funny part. It's like, you see all the potential, whatever. It's like, you obviously have to spend money to create value, right? I mean, especially if you're drilling up value, because it costs money to drill. But still, it's funny because a lot of the time it's almost like a shock to people. It's like, oh, they raise money. It's like, yeah, how else do you think they're gonna? I mean, let's say it takes them $30 million to prove up that they have 150 million ounces in total. And let's say that those 150 million ounces are worth 600 million. Obviously, you would be pretty okay to exchange $30 million in dilution, even if you, again, double the market cap to 60 million. To get back something that's worth 600 million. That's a 10x, right? But it's always like, oh, Jesus, dilution. The thing is, most of the time in a shitty sentiment environment, it's that even if you dilute and have success, you don't get really paid for it at face value, because value might be creeping up. I mean, this obviously de-risking this added value. Did that show up really in the stock price? No. Not yet. So people think that, oh well, they exchanged money for nothing. Well, they really didn't, because now this is a high priority target, and that makes the let's say the likelihood of the next campaign working out and paying dividends increases. So that's value. That's information value. So this is a long rant, just simply about like financings and how people. I don't know. It's like, try not to take it too personally. That's just how, again, the market is short term orientated more than ever. So you're gonna see a lot of that stuff where it's like, and I mean, add the tax loss selling season. So I mean, this was like a ripe example, I was gonna say, for 1 year. Yeah, I mean, there's probably, since it's near 52 weeks lows. Tax loss silly season, people front running, yada yada, because like, yeah, this project here is probably worth a lot more than 30 million CAD even today, in my opinion. Um, Inflection Resources, this is gonna be interesting. It just it didn't hit me until someone said, it's like, yeah, the last update was actually October 3rd. So all of October, November, December, now we're into January. So it's like around 3 months since we had an update. What does that mean? I mean, you can look, that's again one of those funny things. Okay, this was when the news release came. Up for 4 days, peaked at, well, it actually peaked here at 275. Okay. What happened? Immediately, again, people see paper profits, yada, yada, yada. Oh, now I can sell because I'm, up or whatever. Or up from the lows at least. And then you start to form a downtrend, and who knows? I mean, I doubt there's a lot of shorting maybe in a liquid name like this. Well, not officially at least, that we can see. But it's like, time passes. So it's like, what actually happened with the value? I mean, yes, there's an idea of, bad news travels by, well, bad news travels slow, good news travels fast. So yes, obviously there's this paranoia, which sometimes is correct, because that's typically what happens. And, better news gets highlighted and worse news gets not highlighted, obviously, and gets dragged out. Almost want people to forget that you're drilling, let's say. In this case, I mean, they have been very strategic with their work, I was gonna say, because they have Anglo as they're writing the checks, right? And everything, as far as I understand, needs to get signed off by Anglo. And who knows how many at Anglo needs to sign off every news release. And of course, then add the fact that these are serious players. It's the New Quest group. It's the same people, well, kind of the same people behind Headwater. And they own a shit ton of stock, so it's like insiders own 30%. They know they can't sell, they can't flip. So I mean, would it benefit them a lot by massaging the market, if you know what I mean? It's like, do they benefit from being over promotional? No, they're really not. I mean, anybody's talked to Alistair, it's like he's the CEO, Alistair Vedell. I mean, he's a industry veteran, been with the majors, long history. I mean, he has so many incredible stories about the mining sector. He's an extremely interesting person. I mean, these guys are stuck in Inflection. All that matters is that Inflection, at the end of the day, will be a success or not, because they can't really flip it, and they have a good amount of the net worths in Inflection. So it's a process. The goal is that at the end of the day, they will have made a significant discovery, proven up a significant discovery, and Anglo Gold would have paid for a lot of it, and then they get bought out. So it doesn't. My point is that it's like, and of course Anglo, who signs off on, I mean, I'm assuming the work program. They're not after. They're not. They're not twinning holes. They're not looking for cheap or quick bumps to the market cap. No, I mean they've done a lot of geophysics. They're they're triangulating with green rock theory, and they've like the last news release. I mean, uh, so this is this is what got everyone excited, including myself. It's like, oh, inner propylitic alteration. I mean, this based on the theory of these types of porphyries. This should be very close. I don't know if I have a slide actually in the room anytime. Well, recently. Well, that's not the one. Where do I have the zonation? Well, here you don't have the zonation. Here, okay, this is a good one. Inner propylitic, that's the orange here. Potassic is basically where you would expect to find a, high grade ore. This is like the bullseye. This is the actual ore body. This is where the metals are concentrated and, to produce potentially economic concentrations. So they believe that this green here is inner propylitic alteration. It's obviously hard to know. I mean, and look at there's a pretty good gap. That's the fascinating part. It's like, okay, you're hitting inner propylitic. I mean, this is 500. So from here to here, there's like 450. And this is what, like 1 kilometer extra. And do we have a scale bar here? Well, not really, but this is like 500 meters that way. I guess that's 500 meters. That's a pretty fat zone. I mean, this is like 550, 600 meters. Here's like 1.5 kilometers, and it's, question marks here is like open. We don't know the orientation, obviously, because if you drilled if you drill it from the side like this, then you would have, 1.5 kilometers of propylitic alteration, inner propylitic. The important thing is that this is the last zonation in this porphyry system before you get into the potassic, the high grade economic potential ore stuff. So this signals that they are close to what could be a discovery of a potassic high grade core. But do they how would they go about this? I mean, the important thing is, again, figuring out, and here you have bornite and magnetite, so it's like, talk about a good sign. Bornite is, of course, high-grade copper mineralization, but there's probably, specs and stuff, so it's like, actually in the core interval might not amount to something, but I think bornite runs at like 40% copper or something. And here you have arsenic, which is kicking up over here. So this looks closer than this, and obviously this zonation is larger, and I mean it just cuts off here. We have no idea how long it goes. Maybe it's down here, but you don't know. I mean, this is a pencil porphyry diameter. Let's say it's a pencil porphyry. Doesn't necessarily, the footprint might not be that large, so they might drill there. It's like, okay, I don't know how many drills they've been able to do, but it's like, let's say they drill here, don't find anything. Let's say they don't hit the potassic core as they believe, but arsenic values, let's say they can test that easily. Okay, not there. Let's triangulate. Let's put one there. Okay, not there anyway. So my point is that they are systematically trying to look for something, and they're like somewhat blind in the sense. It's not like, I mean, once they actually hit it, then it's of course gonna be much easier. It's like if they spear it, and it's like, okay, we have one hole, kind of like, here, where is it? Oh, Jesus. Well, here you have kind of reach. Okay, no significant results, like miss, no significant results. Okay, so they drill here. Well, they hit sniffs of stuff, and then between this, boom, 145 meters of insane grades. And this even more insane. And that's it. But how easy was this to hit on the first try? No, triangulating, and they missed, and then they hit. Oh yeah, here we have I think this is a drill sequence, kinda. So first one, okay, no significant, okay, probably no significant. Okay, drill one here, okay, 100 meters of 0.3, it's like, yeah, I mean, this is obviously very good, like 0.40% copper. But then all of a sudden, in between these holes, I don't know the exact orientation, but look at the scale here. So this is like, I don't know, let's say 400 meters from where they hit 145 meters of 4.3 grams per ton gold, 1.20 copper, 84 meters. I mean, massive barn burner, world-class hole. 150 meters from that, they hit 0.13 and 0.40%, 0.25, 0.32%. This one, very close, seemingly, to it as well, hit nada. That's the thing. And that's not a lot that of people that appreciate, I don't think. That I remember when I read up on it, it's like, the mineralization isn't like, oh, it's gradually just increasing. No, that you can literally be very close to it and not have much in terms of significant intercept. But just, let's say, 100 meters away, boom, you have a world-class intercept. I don't know what's going to come out of the next news release, obviously. I just know they've had 3 months of drilling. If there is something there, they have 3 months of testing, prodding around, figuring stuff out. So I don't know if we're going to get a discovery hole or if they're going to come out and say, it's like, yeah, okay, we've done 10 holes, let's say. And we're still looking for it. Or we hit what we think is a potassic core, but for some reason they're, despite the fact that they found bornite, it's not economic. I mean, there's a ton of possibilities. The only thing, again, we know that, I mean, Cadia Ridgeway, I don't know how much that would be worth today, but let's say $1 billion plus. North Park's billions, Koval, whatever, billions. Cadia, $10+ billion, the granddaddy. The Cadia East and stuff. This is Cadia Ridgeway, part of the Cadia complex, and these things show up in clusters, which they believe is the case also at Duck Creek. They think there might be several porphyry bodies, which is great. I mean, if we find one, and if that's a company maker in itself, and you get you can imagine if you hit one, there should be more, like there was at Cadia and North Parks, etc. Anyway, we know the market cap is 18.75 million CAD. I don't know, let's say they have 2 million in cash. They're free carried by AngloGold. So it's like, I mean, the upside potential should be obvious, because AngloGold is interested, and AngloGold is not a small company. They need $1 billion+ mines. And Inflection, at the end of the day, if AngloGold put it into went up to PFS, for example, and they find something exactly worth $1 billion, and I think that's the threshold for success in a sense for AngloGold, and it could obviously be much more than that. But if in that case, Inflection would keep 25% plus I think a 2% NSR, which is a rule of thumb around 10% of the project. So that's like 35% interest in $1 billion deposit. That's 350 million. The current market cap is 18.75. So obviously you see some upside potential. That's like, what's that? I don't know, 19 bagger or something. I'm not saying that's going to happen, but we also know Greatland Gold, with their minority interest in Javieron, they reached, now it's much lower, I don't know how much lower, they peaked out at a market cap of 1.3 billion, if I'm not mistaken. In Australia, minority interest, 30%, I think they had a 30% stake. More advanced though, but like, that's the potential price. Those are the kind of prices that an AngloGold would be looking for. It's like minority interest worth 1.3 billion. So it's like, That's the beauty of Inflection. I have no idea if they're gonna make a significant, like, world-class discovery or no discovery at all. I just know from this price level, given that they don't even need to dilute really, because they're fully carried, if they find a significant discovery, let's say even a world-class discovery, uh, assuming, and that's very much assuming because I wouldn't be able to hold on for with that size. But it's like I have a pretty decent position. This is my largest pre-discovery holding. Uh, Imagine if they found something world class. Imagine the upside potential from 18.75 million CAD. Yeah, I'm not gonna put out numbers there, but you can imagine. So it's like even if you don't have a lot in a high risk, high reward unit like this, and they have many more targets, but still, are there any guarantees? No, and that's the beauty of it. You don't need any guarantees. If there's a 20% chance that they are gonna make a significant discovery, if you had 10 of those and 2 worked out, they would pay for the 8 that didn't and actually went down 50%. More than pay for it. That's the thing. You know, don't bet all on a store like this, but you don't need that much at the same time for it to work. And if it doesn't work, yeah, I mean, I don't have a small position, so it's gonna sting if I see Inflection go down 50% and they literally don't find anything across their entire huge portfolio. But it's not gonna be a killer. But if they actually make a significant discovery with the position I have, that could be material benefit to the portfolio for sure. Eskay Mining, I'm not going to talk too much about this. Quinton, like it says here, Quinton speaks Eskay here. And I've talked about this before. Eskay, that's like short, hugely depressive. I remember the good old days of 3.5. I remember the good old days of like 0.40 or whatever. Now it's like, multi-year lows. Okay. And I've gone through like the reasons for it, and of course nowadays it's because the bear market, lack of news, bored to death, looks like a failed case, and it's just basically feeds on itself in that sense. And people know that if they want to do some serious exploration work, like serious drilling, which could lead to a discovery, they would still need to raise money first, right? So like in the eyes of the markets, no rush at all. It doesn't matter if it's cheap or not, no rush to buy, because that's what people are assuming might happen. So again, it all makes sense, given especially from a short-term perspective and sentiment perspective and psychology and yada yada. But as I've said, it's like what was I gonna say? The geologic potential in their land package, I think that's still huge. They started off great with TV and Jeff, especially TV. Hit 90 meters of 2 gram per ton and stuff like that, 10 meters of 15 gram per ton, yada yada yada. Their carpet bombing campaign failed. I mean, the hope was, and that's the problem they were in, kinda, that the story had done so well on the back of their TV Jeff and the amount of targets they had. So hype was high. People were starting to see, it's like, hey, maybe this could turn into, and including myself, like, hey, this might become a multi-million ounce deposit. And then the hard thing is like, okay, I don't know exactly what it peaked at. I think it peaked around like 500 million market cap. So what do you do then? They had pretty good access to capital. I think they raised like 20-30 million, maybe the last big campaign, because that's kind of the sums you need to move some. How if you have a market cap of 500 million, how do you keep people interested? How do you add significant additional value? Can you drill 5 drill holes really and hope that we're gonna be able to prove up enough stuff in 5 holes that this market cap is not gonna disappoint people? No, that's gonna be really hard. So they swung for the fences. They did that carpet bombing campaign, which I think made a lot of sense. I mean, in hindsight, might have been a wee bit high risk, but they did it because if they could have connected, TV and Jeff, for example, and show that, hey, there's, these, what was it, CSAMT, I think, or VTEM anomalies, like if this is all VMS mineralization, boom. I mean, then they could maybe basically confirm, yes, this is one of the biggest discoveries in some time. That did not happen. I mean, they hit some sniffs and all of that. So it's like, yes, there's in between TV and Jeff, yes, they hit. So, but they did not hit enough and didn't connect it in a way that's like, oh, now we can see multi-million ounces. So that obviously took a toll. So it's like the excitement kind of, I mean, I don't remember exactly the results they had, but it's like underwhelming compared to the market cap and compared to the sentiment in the stock at that time. So you went from like, a trajectory, things are just getting better and better, to like, boom, okay? And then you blown like, let's say 20 million on doing that as well. So all of a sudden, market cap looked high because the future that was priced in kind of didn't come into fruition, not yet at least. Boom, down. Also, you need to raise even more money. The bear market kicked off for real, and we went into the worst junior market ever, basically, if you listen to the Ross Beatis and stuff. So you had all these factors coming in. So that's one thing I think is really important for this isn't 5 years. Important for people. It's like when you stop taking stuff seriously. I think we can, again, people look at it as just like bag. It's like, oh, this was a scam or whatever. It's like, no, you can kind of exactly see why this happened. I just described why this could happen. Psychologically. Hot story, results were getting better and better in a sense. More money, even more exciting, started pricing in even more, and they have to swing for the fences again in a sense because they had at the time access to capital, and to have this market cap look low, they have to find even more, right? Make a bigger discovery or prove up even more. So they rolled the dice, lost in a sense, and then couple that like company specific disappointment with, okay, now they need to raise money again, and now the market is going to shit, so money is scarce. So it went from an exciting story with multiple drill rigs to like, last year, I mean, they didn't drill anything. So imagine the gap in sentiment from a company specific perspective, and due to the results, and also the from the sentiment of the sector. It makes kind of perfect sense. That's what makes this sector brutal, because you never know when sentiment is gonna give out. You never know what the results are gonna be. But this happened, and now it's quote left for dead, because now it's they are not drilling anything. They didn't drill anything this year, etc., etc. So there's no chance for anyone to get rich quick in this story. There's no answer results that could come that somebody could just YOLO in today and it's like, oh, I could make 100% in the next news release. That's typically what most people are after. So this is, to me, getting interesting. Like, I mean, basically Quinton said, that's like, there is a lot of potential, geologic potential. They have, the fact that they have multi-kilometer long Bleg anomalies, the fact that they hit, like we see here in the highlights from sea. I mean, look at these grades. It's like 100 grams per ton AU, 100 grams per ton, 200 grams per ton. Yeah, soil sampling like vermilion, scob, tornado. I mean, there's high grade mineralization all over the place. There are anomalous bleg samples all over the place. They own like 90% of the Creek district. Eskay Creek is up here, which is, world renowned. I mean, that's such a, let's say, big slash good deposit that Skina Resources, which own the remnants of Eskay Creek, has a market cap of 1.45 billion. And that's when the or the eyes of the jewel, whatever you call it, were plucked out already. The original Eskay Creek, I think somebody, maybe it was James Kaiser, who put a like a, if that would be discovered today, that would be like a $3 to $4 billion, maybe even higher, because when he talked about it, gold and silver prices were lower. I mean, they had so high grades that like they were producing gold at, I think, or silver, I don't know which one, at negative cost, because the other metal more than made up for all the costs. And that saved. I think it was Barrick's bacon. It saved at the time because it was a bear market and they were still printing money from that mine. So you can imagine that a discovery like that would be worth billions, and even the remnants of it today, lower grade remnants, are worth 1.45 billion in the hands of Skina. That's the kind of prices I mean, blue sky prices we're talking about here, and there's sure as heck a lot of potential still in the ground, because they literally barely scrape the surface. So yeah, I mean, again, it's like from a land. I mean, I have no idea why. Maybe they've tried to do it. I have no idea why Skina hasn't bought SK yet. I mean, they already have. I think they have Franco Nevada in them. I mean, they're a royalty company, obviously, but it's like, okay, if you're Skina, you have your patch of land, you have a multi-million ounce mine. It's probably gonna go into production. If you're a major, it's like, okay, yes, you have a big deposit, but it's like, if depending on who would get in there, of course. I mean, Newmont took over Newcrest and they have land in the area, but otherwise, like think if you're Agnico, they talk about regions. They want to see the possibility for multiple mines over multiple decades. I don't think Skina's land position right here, at least, can really support multiple mines or the idea of multiple mines for multiple decades. Eskay Creek has the lion's share of this VMS district. So I mean, if you, I mean, even if they acquired Eskay for 50 million, paid a 67% premium today, let's say, or 60% premium, I think they would get that back and more, assuming they would be acquired. Or maybe it would even tip them over the threshold where a major would like, okay, now we actually would want to buy Skina. Because we just don't want to pay, let's say, fair price for the mine. We want to pay fair price for the mine or the deposit, but we want the exploration potential in the land package. That's how we, in the future. That's how this investment is really going to pay off for us, instead of just buying a deposit that's I don't know what the mine life is, but let's say 15 years or whatever. So yeah, basically Eskay Mining has all the exploration potential, and Skina has the mine. But I haven't made up my mind really. But it's just like it's kind of similar story, kind of like Western Alaska. It's like both stories are left for dead. All the momentum has gone out in a sense. The geological potential is very much intact, and they have like, well, of course, Western Alaska already has a solid resource behind it. Point is that it's like, in a sense, geologically intact stories, some of the most prospective projects I know of, But they again have been left for dead, like they have a run-of-the-mill land package or something like that. I mean, this is beyond prime ground, I would say. Again, I mean, the chip samples prove that. In Western Alaska, they prove that with drilling and the fact how CRD systems work. So yeah, I'm probably gonna leave it there for this video. I'm not gonna go through more companies right now because they always go much longer than I anticipated. But okay, let's well end with the fact that yes, Eskay Mining, high risk, high reward story. Because they don't have margin of safety yet. They have a lot of upside potential. If they found an Eskay Creek type deposit, there's huge upside potential in that case. That's if they find it. Inflection as well. It's like obviously if they find another North Parks or KD Ridgeway, huge potential. It's like multi-bagger potential, free carried to boot. Is that a guarantee? No. Western Alaska, is it guaranteed that they find more ounces, etc.? No, I mean, it's not guaranteed. But all of them, looking at the market caps like Eskay, 33 million, Inflection, 18, Western Alaska, 30, Headwater, 14. If any one of those make a significant discovery, and it's like, well, Western doesn't have a major backing yet, but it's like Headwater, you have Centerra and Newmont, so obviously they're betting, they're saying you have a chance of having $1 billion plus price. What was I going to say? Inflection has Anglo Gold, so that's, yes, box ticked. People smarter than us are saying, yes, you have $1 billion potential on your ground. Western Alaska, very tightly held stock. I would be surprised if they haven't had inquiries from, silver companies or whoever actually. But they might not be happy with the deal, or you never know. It's like Eskay Mining, for example. I would just think that Skeena has approached them. Otherwise, I mean, that would be the first thing I did. I think if I was Skeena, I would like, hey, and that's saying that's like from a geological potential. It's sure. I think, or this is one of those, again, Schrodinger's cat within Schrodinger's cat. Some could say, well, they have, I mean, SK is like, well, they haven't proven up a mine yet, so they're not worth anything because they don't have anything worth mining. It's like, yes, you can look at it that way, but from a risk-adjusted basis, and if everything has value, I mean, because of the potential for it in a sense. The market is saying, okay, we're at least, I mean, even this shit is sentiment, 33 million cat. I mean, it's not nothing, but still, I mean, when you actually look like and figure out, hey, if somebody owned this and worked this, what could it potentially have? It has huge leg anomalies. They've hit the TV Jeff, TV extension here as well. Vermilion finding a bunch of high grade, Torn Lake finding high grade, Cumberland high grade, TM Zone high grade, and you're in the SK district. What theoretically could be hidden at depth here? It's like if somebody threw money at it, they did even more work, and we know it's like, what happens if you find half an Eskay Creek? What happens if you find two halves of Eskay Creek? What happens if you find another Eskay Creek? So obviously that that has value just strictly from a potential perspective. So that's what makes it hard to say. I mean, I think, for example, Inflection is dirt cheap in light of the risk-adjusted potential. But that can still be cheap. This is what I mean. This you get from a poker background, I guess. But it's like a no-brainer buy for me can be on a risk-adjusted basis. It's very cheap. It's pricing in 1% chance of success or 2%, but I think it's 10%, for example. So it's 100% undervalued in a sense. But it can still be just 10% chance of success. So that means you're not betting the farm on it, because 90% of the time you're going to be minus 50%. And 10% of the time, if you hold it long enough, you're going to be up 10x. So that can be a no-brainer bet. That is like, based on everything you know, it can be super cheap, but it's still not one where you're just betting the farm. I mean, again, it's like I'm going back to my I don't want to encourage people, but it's like right now in the gold space, my betting the farm bet is First Nordic Metals, because I believe they already have a tier 1 deposit in hand, 45% ownership. So in my view, I'm taking no risk. I think First Nordic should go up, just up in value, because it's not even remotely reflecting the value in Borssele. Then all the exploration upside comes for free. And yeah, they have a 90 million market cap. That's still quite. I mean, that's still quite low. Even if they make a significant 100% owned discovery, that could be worth $500 to $1 billion. So I'm getting like almost exploration type, or almost pure exploration story potential, while at the same time everything is backstopped by the fact that Borssele is worth many times more than the market cap. So those are bets that you're not going to find very often. None of these bets are that good in my opinion. Eskay has huge potential, but no real margin of safety, except that yes, somebody is probably going to obviously pay something for the upside. Maybe this is worth at least 50 million to Skina, for example. In that case, you in a sense have margin of safety. Inflection Resources, what could they sell it for to someone else? I mean, I think somebody would be happy to buy Inflection. I mean, Anglo Gold would obviously. That's the funny part, in a sense. I mean, they're gonna spend more money than the entire market cap of Inflection. So obviously, if they could, they would probably just buy Inflection. So, you know what I mean? I mean, in a sense, again, it's not tangible, but yes, they are cheap because somebody would probably pay more than the current market caps for these companies. I mean, if you asked Core Mining or Hecla, it's like Western Alaska came around, it's like, hey, would you pay $50 million to buy our entire land package and our resource? Yes, I think they would do that. But would the management teams want to do that? I doubt that, and I mean that's why I think they're cheap. Anyway, I hope I just again always want to make sure, more now I guess than ever, something that is cheap, and in my opinion, let's say a no-brainer buy doesn't mean that I'm betting the farm on this. A no-brainer buy might be high risk enough that you should only have 1% in it, or even less than that. I mean, depending on how many other ones you have, etc. It usually comes down to the margin of safety, the downside risk, or the diversification to the upside in a sense. I mean, for Inflection and Headwater, they're at least Headwater is fully funded so far on Spring Peak, and Inflection is across all their the areas they're working with Anglo Gold. So you're not taking any dilution risk there. So it's legit diversification to the upside. It's not that, I mean, SK would need to raise money, so you're diluting the diversification in a sense. So there's some kind of trade-off. Anyway, a long rant, gone on long enough. Thank you very much for listening. And again, I am biased with every story I talk about, especially if I own it. If I don't own it, I'm biased against it. That's just by default. I don't care how many people say they're biased or unbiased or whatever, or don't get paid or don't have a banner sponsor. We're all biased, just varying degrees. So yeah, I mean, again, consider me biased. I'm just talking out loud here. You don't need to buy any story that I own, for example. You don't need to agree with anything I say. I would just point out that you don't need to go all in on every single store you like. You can't do that. But that's why it's like I would bet I've lost more in juniors. I mean, in more cases than I have made money. I would just think that is the case. But the beauty is the asymmetrical risk reward and the fact that, I mean, especially the higher conviction cases where I have bigger, because let's face it, I mean, if you find such a case that you're like, I'm putting 10% of my money in this because you think it has margin of safety, whatever it might be, or maybe you're just super greedy and it's actually no margin of safety. Anyway, one of those works out and that pays for, let's say, 10 half% positions that gets cut by 70%, stuff like that. And in the long run, it's the total portfolio returns over the long run that matters. You can have pretty much more losers than winners. You just have to make more on the winners than you do the losers. So I wouldn't say I don't own any of these companies because I'm guaranteed to make money on any one of them. I simply think the amounts I can win in case it works out more than offsets what I can lose if they don't work out. And of course that goes also with a longer time frame, because you can't really, I mean, you have to let a winning story to play out as well. If you had a portfolio of only high risk high reward cases, you have 20 of them, 5% position in each, and your rule was, I'm gonna sell any one of these that go up 100%. How is that going to pay for the ones that go down 50%, etc.? No, it won't. That's the thing. Doesn't add up. You have to get some multi-baggers, and typically that means holding periods that are more than one news release. Anyway, yeah, thanks for listening. Not investing advice, not buy, sell recommendation. Some companies are banner sponsors as well, twice biased, all of that. Not investing advice. Do your own due diligence. Don't invest money you cannot afford to lose. Juniors are very risky. Yeah, bye bye.